Hey guys, welcome back. I hope you had a really great day trading today. So today's price action was absolutely perfect for a tutorial that I've been meaning to make. So today I'm going to go over how to sell credit spreads, which strikes to choose, what to sell them for, and when to take profits. So this is really big stuff and I'm super excited to finally get a chance to make this tutorial. So SPY today opened with a gap up and the top of the implied move was 599 and the top of the implied move on Tuesday's contract 600. So at open, if you had orders in for 599, 600 bear call spreads. Now a bear call spread is where you sell 599, just like if you had 100 shares and you're selling a call. So you're selling 599 and you're buying 600. 600 is your collateral. So you don't need the 100 shares. 600 is your collateral. So you have 599, 600 bear call spreads. So right here, we opened at the top of the implied move. I always have my orders in before market opens. Yes, there's definitely times where I trade intraday outside of this formula, but for the most part, they're already in and my trades fill automatically. So this 599, 600 bear call spread, I put 3 trades on that, and the first order is sell at 0.35. So when we gap up, this was at the money, 0.35 would have filled right away. And the risk on that is 0.65. Then if we keep moving up like we did, the next order to fill is 0.45, the risk there being 0.55. And if we keep pushing up higher, then the next order to fill is 0.55. The risk on that trade is 0.45. So overall, those 3 orders, the 0.35, 0.45, and 0.55, you have a max win of 1.35. And the max potential loss, if we don't close down, is 1.65. So today, if you sold 599, 600, all 3 of those orders would have filled for you. And you would have closed up 100%, and that means up $135. So we don't always close within the implied move. Sometimes we close above it, sometimes we close right in between, which you'll see today in IWM, we closed right in between, which was a break even. But today, if you had 600, 601 bear call spreads, that was a little bit of a safer play. The first 2 orders would have filled for you. So you would have gotten 0.35 and 0.45. And those would have filled at open right here and closed up 100% with that pullback down. So the win on this trade, 600, 601, would have been up $80 and the risk would have been $120. Both of these spreads today would have closed up 100%. So really quickly going over today's price action, we opened with a gap up to the top of the implied move. These would have filled. We dropped back down to the 35 EMA. We did get a red signal line right here, and we did have a small bounce on that 35 EMA, and we stayed right in the middle of the implied move. All right, so then SPX today. Same thing over here. This is what I trade, and these are my orders every single day. They don't change. It makes trading really easy because it's mechanical, and you don't have to have as much emotion in it. You don't have to overthink things. You just know which strikes are you going to trade today, and then you know what your orders are going to be. So today, both today's top of the implied move and tomorrow's would have paid if you had the orders in. So 6,005 and 6,015 bear call spreads today. My orders on this are always $3.50, and that comes with a risk of $650 or $6.50. And then the next order is $4.50, so 450 win with a 550 risk. And then that third order is $5.50 with a risk of 450. So every day, those are my 3 orders. Today, all 3 of those orders filled. And if you follow any of my trades ever that I post on other boards, you know that usually I'll take 6,005, 6,015, but then I'll put another order for 60.10, 60.20. So I have 2 spreads on, and the bottom one, the 6,005, 6,015, all 3 filled with that pop to make new all-time highs today. And then after that, we dropped back down. The second order, the 6,010, 6,020 bear call spread, the first 2 orders filled on that. So on the way back down, both of those closed up 100%. So SPX opened with a gap up today to the top of the implied move. You could see this long wick here that made it above this dashed line. This dashed line was previous all-time highs right here. So yes, we did make new all-time highs today, and then we did get rejected there, pulled back down to the 35 EMA. You can see the red signal line right here, which was basically on the 4th candle here. So we dropped down to the 35 EMA, and then we closed right in the middle of the implied move today. So SPY closed up 0.34%, SPX up 0.3%, VIX down 4%, we are back under 15, and we did close within the implied move today. So super fun, super easy trading day in the S&P 500. QQQ, we did see a very similar open today. We opened with a gap up, and we took it to the top of the implied move, a little wick higher here, but the bodies of the candles all stayed within the implied move. So we opened above this island top gap. We opened in the bear part of it and then pushed up to the top of the implied move. So here, if you had bear call spreads at 510, 511, you could have done the same thing here. Put those 3 orders in, 0.35, 0.45, 0.55. All of those would have filled here, and that would have closed up 100% with that drop. If you wanted to get a little bit safer and sell 511, 512 bear call spreads, then I didn't trade QQQ today, but with this move, it does look like the first 2 orders would have filled. Still would have gotten 100% close on that one. And if you did try to sell 512, 513, that would have been the safest trade in today's trading range. Then you probably got a 0.35 fill. That also would have closed 100% on that pullback. So obviously, the closer you sell, the higher amount that you can make, but the higher the risk as well. So going over just the price action today, gapped up to the top of the implied move and then pulled back down to the 35 EMA. We also had the 30-minute 200 moving average here. And remember what I said in the past few months, every time this 35 EMA, it didn't quite get into the green, but this could be a signal that we see a pullback here. This is not necessarily a bearish signal, but it is a very overbought signal. So 35 EMA is just underneath the green here. This island top got closed out. We did close it from above, and QQQ closed up 0.16% today. VXN down 5.24%. And we did stay completely within the implied move. A little bit of wick came out here, but all of the bodies today were completely within the implied move. So then IWM today was on a tear and 100% was on a mission to make new all-time highs. So IWM today did open with a gap up to the top of the implied move. And this is something I've been mentioning a lot lately too. When we gap over the implied move completely, usually what happens is we squeeze in that direction. Today, that is exactly what happened, and we pushed up and we got above previous all-time highs. This is huge. This is the first time we've seen all-time highs in 3 years. So let me take this to the 5-year chart right here, and you could see previous all-time highs were in November of 2021. So today, First time in 3 years that we have seen new all-time highs in IWM. That is a huge deal. And let me take it back to 30-minute here. So as soon as we did hit those all-time highs, we did get pushed back down. So we did definitely see an overextended run. I had no doubt in my mind that this was a setup to reach all-time highs, and we did hit that. Then after making those all-time highs, we did drop down. We dropped down to right where we did see previous resistance, bounced there, and closed right at that level. So looking at bear call spreads here. So if you did take 242, 243 bear call spreads here using the strategy I was talking about before, so a $1 spread, you're always going to have between $0 and $1 is what you can sell this spread for if it's $1 wide. So that 0.35, 0.45, 0.55 order, if you had that at this 242, 243 bear call spread, then we closed right about in the middle, a little bit underneath that, 242.40. So that would have closed almost completely flat, maybe up a few dollars, but not much. If you did maybe sell this spread down here for 0.75, just because I only have those 3 orders doesn't mean that you can't have maybe a 0.75 with a 0.25 risk. You could have added that, then this spread would have closed up when it pulled back. But if you just had those 3, then this would have been almost completely flat, very little gain, and no loss here. But if you sold 243, 244 bear call spreads at $35, $45, and $55 on that push up, then those would have closed up 100% because we did close underneath 243. And we had such a big move today that even 244, 245 would have been a profitable spread. You could have probably had all of those fill as well here. So IWM, huge up day today to hit those all-time highs, up 1.52%. VX down 1.45%. And we didn't close within the implied move on the day, but we did close within the implied move on the next day's contract. All right, and then DIA. DIA again had the second biggest move of the day. So IWM and DIA have been definitely seeing the biggest moves. And we opened with a huge gap up almost to the top of the implied move. Then we took it up to the top of the implied move. So 448 did get hit today. And I don't trade DIA because there's only weekly contracts here. So how would you play this? If you have 100 shares of DIA and you wanted to sell calls on the week, then week made it up to 448. You probably could have gotten $2 a piece for every 100 shares. So $200 you could have sold calls for. And then the goal here would be to close within the implied move for the week. You also could have sold bear call spreads. 448, 449 would have filled. I don't think they would have filled at 0.55, but maybe 0.45 would have filled. And then again, you would want to see the price trade downward for the rest of the week. And with this 35 EMA coming up into the green, there is a big likelihood of closing down. We are overbought and we did get a red signal, even though it did flash green towards the end of the day. But we are very overbought. Plus, we did get this signal today, which could be, we're still tracking this. It's a new signal to me as well, but so far it's been really accurate. So let's see if DIA pulls back from here. We did make new all-time highs today. We had a pretty decent size up gap. Filling that gap is likely, and cooling off a little bit after getting that 35 EMA into the green is also likely. So hopefully I was able to clearly explain bear call spreads, and I know that I will be doing bull put spreads. I'll do another tutorial when the price works for that. It's the same thing on the downside. When we drop, you have your orders in already, 0.35, 0.45, 0.55, and just let them fill. And this is on the weekly contract, but there have been some really fun intraday moves in SPY and QQQ that where both sides fill, where maybe we drop down to the bottom of the implied move, all of these orders fill, and then we pull back up, and then all of these fill, and then we drop down just a little bit, and you collect all that premium across the board. So I will be doing more tutorials about this. This is the first of many, I'm sure, and I'm gonna end this video here because I want to keep this as a tutorial. So I don't think that having tomorrow's trading range is beneficial on this video, but I will make a separate video in a few hours. Tomorrow's trading ranges will be out, and they're also going to be on TradingView tonight. Here's the link to my TradingView again. Please make sure to subscribe over there. It is free to have a TradingView account. You don't need to pay. I have a pay account. I definitely think it's worth it, but you absolutely do not have to. So subscribe to me over there, and every time I post a chart, you'll get notified about that as well. So there you have it, guys. Have fun, trade safe, make sure you take profits when you're up, and I'll see you guys soon.